right? So how do I find my key levels? Very simple. So I take the 50-minute, so there's a 50-minute fair value gap here. So there's the imbalance. And what I'll do is I'll take the candle before. So this is the candle before. This is going to be my sort of key level. So I'm going to mark that up just like this. So here's one key level. Here's another key level, which I'm also focusing on. Again, it's the candle before the fair value gap. Just remember that as basic principle. Now, how do you know which key level it's going to be? Well, you don't know for sure. That's where the probabilities come in. But from here now, I'm just looking at this live. My thought process breaking this down is like this. So this is the weekly opening price. Now we are above the weekly opening price. So anyone who knows how the weekly opening price works, we want to be selling above the weekly opening price with confirmation. Now this is the most important thing. You don't just want to blindly sell, you need to have confirmation at your levels. And so the question now becomes, how do you find confirmation at those levels, right? So to find confirmation at those levels, we will use this. So again, I'm going to draw out the same sort of level on the, what's it called? On the footprint charts, right? So this is the candlestick chart. Now, when we go to the 1 minute, we can see here the footprint chart equivalent. So what we're seeing is okay, breaking down the order flow live as it's printing. So we have our levels over here. So what I'm looking for when I break things down is I'm looking for, yes, we see breaks below. Look at this red candle here, right? This red candle, of course, was red, so bearish. But what we really saw here was a couple of aggressive buying over here. Even this green candle, we had a huge seller and we had all this buying up here, buying. So we see the sellers being rewarded with follow through, but the buyers in this occasion, they haven't been rewarded, right? They haven't had a follow through. And so because of that, we want to understand what proof is the market giving us, right? So proof, P-R-O-O-F, proof stands for price rejecting of opposing flow. Right? Price rejecting of opposing flow. That's P-R-O-O-F. So what we're seeing opposing flow. So in this case, buyers being rejected, right? So price is it's the rejection of the opposing flow. Just remember that proof. That's the proof that the market gives you. So in this context, we're looking at roughly the same thing. So we see price tapping into this key level here. And despite having this key level, we can actually see a ton of buyers over here, right? Look at these aggressive buy orders. If we just take a look at a few, we see 217 for 523. And then we see a lot of this blue delta over here, 44 for 153. And notice how we see zero prints, right? So 0, 0, 0, 0. We see these zeros over here, which signifies a reversal, right? Or it increases the probability that the market is less likely to visit here. So when you see a 0, it kind of means that the market's finished trading there. So it's less likely to visit there, basically. So that's how the footprint charts work. And again, we see the same thing over here. We see quite a few 0 prints. 1, 2, 3, 4, 4 0 prints over here. So this is now ES futures between 64.50 to 64.45, right? So 55 to 45. We see tons of buy orders failing, break below. Now from here we're looking for a similar-ish sort of thing, right? So again, if I go back to the the candlestick chart, we have the Asian low here, right? This Asian low, just going to write AL.